Welcome to the Blockchain VC, a podcast about crypto and the digital assets ecosystem. My name is Tomer Federman, and I'm the managing partner at Federman Capital. We invest in the most promising blockchain startups across the globe. I have more than 15 years of experience in tech, and before starting the fund, I was on the product side at Facebook, where I led product strategy and global growth of some of Facebook's major ad products. Previously, I also lived in Silicon Valley for a few years, where I attended Stanford Business School. You can find me on Twitter at Tomer Federman. Before we begin, please note that this podcast is for informational purposes only, and all the opinions expressed on this show, either by guests or me, do not reflect the opinions of Federman Capital. Nothing on the Blockchain VC podcast represents an investment or financial advice. Please do your own research. Also, if you like this episode of the Blockchain VC and want to help bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to the podcast. This only takes a few seconds and helps get the word out. Okay, let's do this. Really excited to welcome to the show today Jack O'Halloran, CEO of Scale. Jack, welcome to the show.
Pleasure to be here, Tomer. Thank you for having me.
Yeah, absolutely. So, Jack, I'd like to start by talking about your background and how you got into the crypto space before you started Scale.
Yeah, so I've been doing tech startups in Silicon Valley for about 15 years. My first one was called Good Technology. It was a cryptographic secure messaging platform. So it was a nice introduction into security and messaging and networking. And that company ended up doing pretty well, was acquired by Motorola for about $500 million. I started on the ground floor there as a college graduate, and then kind of worked my way up to an executive position. And then the founder and the CEO took me under their wing and recognized that I could go and give it a shot starting my own company. So after that, started a company called Incentiline that was a digital currency platform. So you could essentially tokenize resources in an enterprise. So if you had a scarce resource, you could apply a currency around it, and people could pay for it with this internal currency. So NASA, for example, you have these NASA bucks, and by wind tunnel time or supercompute time, or resources to get foreign nationals on base. And if you need someone tomorrow, you pay more. If you need someone and you don't want to spend as much, you could wait till an off-peak period. And so it created a natural smoothing of resource allocation. And anyways, it was one of those great ideas that that is really great in an up market. But in 2008, when the market crashed, it wasn't a great idea. But a little too forward thinking and innovative for that point in the cycle. So we ended up not giving up though, and started a company called Octana, AKTANA, and almost every pharmaceutical rep and biotech rep in the world, from small molecule pharma to oncology, is guided through this AI machine learning platform to help deliver better medical information to doctors. So learned a lot through that process, and raised over $100 million, built a hugely successful global leading company, and made a ton of mistakes along the way, which I think thankfully I've become a better entrepreneur because of it, and then really got into crypto and Bitcoin really in 2013, but started with the white paper was circulating all around the Bay back in 2011, and so that stimulus started my journey, and then when I was starting a company in 2017, it was a no-brainer to do it in crypto, especially after I learned about Ethereum.
So what is it about crypto, and sounds like Ethereum in particular, that attracted you to the space?
So for me, it was one, I think this initially the premise of consensus and proof of work was really cool in terms of being able to understand how a currency could be created. But it wasn't enough to get me to want to start a business in the space. It was enough to make me be an incredible enthusiast and a lover of Bitcoin and a supporter of Bitcoin, which I still am. But then when I learned about Ethereum and understood how smart contracts and logic and processing could interact with consensus and trustlessness, then I recognized that you could create different systems and structures and organizational units and groups. And the cool thing about it is you can create better structures and systems where you almost create a co-op type environment where the group wins more than a select few. And and the cool thing about this is you could do this typically without the consensus model, without blockchain. But what you're lacking in those environments is you're lacking a trustless system that still doesn't need a trusted intermediary. And you're lacking a bootstrapping mechanism where you can get a group, build a community. And so the cool thing about cryptocurrencies and decentralized networks and decentralized systems is they give one a financial win to the people who are early in supporting the network by purchasing the asset. To people, it gives a win to people who are going to devote their lives and take risks to get things started. But it doesn't create a long-term monopoly situation like you have with current centralized Web2 companies. So you actually can create this positive societal lift in conjunction with a good monetary win. And to me, that was incredibly stimulating and amazing to hear how we were able to create new business models. And so that's what got me. That was the hook.
Yeah, it's amazing, right? The first time I realized the implications of smart contracts, it's mind blowing, right? There's so many different use cases you can immediately imagine. At first, I remember when I learned about it, I was like, this can't be true, right? Like, surely
Yeah.
something doesn't work here, because if it does, this thing is going to change the world.
Yes, exactly. Yeah, and Tomer, I think there's right now there's this group of people that I think really see the playing field and understand how this stuff can come together and how it will come together. And I think recognize it's just a matter of time. Then there's another group of people who just I think don't see the entire connection between the technology and the impact on human behavior and human structures. And so I think people like yourself, you were at Facebook, and people like me, and and I'm sure most of the listeners here see that connection. And the cool thing about these growth areas is it's almost like there's a secret that not everyone still gets and knows, and it makes it also
Right.
fun to work.
Yeah, absolutely. And, I remember when I left Facebook, many of my friends and colleagues thought I'm crazy, right? Like, I was like,
Hmm.
listen, guys, blockchain is going to change the world.
Hmm.
And, well, guess what, right? Like, a few months later, Facebook came with this Libra initiative, and the same folks who thought I'm crazy were calling me about, hey, like, please tell us more. We need to understand what's happening here. So it's a process. It takes time, but I think the technology, kind of like the internet, right?
Hmm.
It might take a bit longer, or it might move faster than what we think. But in my mind, it's not a question of if; it's more a question of when.
Yeah.
To your point about the excitement around smart contracts.
The other piece to that is that I think is one of the biggest problems in this space is if it's a benefit and a negative. So if we didn't have this incredible growth surge in token prices, people would just be looking at all the growth in terms of progress and be incredibly it just bullish and optimistic if you only are looking at the growth curve from the tech and the adoption perspective.
Right.
And because this stuff just takes a long time. But then when you see these surging prices, you expect the growth to be faster. So I think there's a short term uh, belief that we should have more progress. But I think what people typically do, they overestimate what you can do in the short term and they underestimate what you can do in the long term. And I think we're just seeing that come into play here, like textbook manner.
Yeah, absolutely. I mean, it's always funny to me when I talk to folks who maybe are not so much in the weeds, and they're like, "Well, nobody still uses blockchain, and this technology is in its infancy," which is true. It is in its infancy, but on the other hand, if you look even just at DeFi, right, it's like a $1 billion market that literally didn't exist slightly over 2 years ago. So
Yeah.
it is moving, and it's actually moving quite rapidly, but it's not like something that's going to happen tomorrow. It's a process, just like Bitcoin is a process, right?
Yeah.
Bitcoin like 3, 4 years ago was trading at like $200, $300. People
Yeah.
forget that because they focus so much on, oh, it was already at 19K.
Yeah.
So yeah, I think it's really important to kind of focus on the big picture and take a long-term view, and preferably be less time sensitive.
Well, and one more before we move on, one more comment on that. So you look at DeFi, and people. Well, so one question people have is, well, what are the use cases? Why would people use blockchain? There are hundreds and thousands of use cases. One of those use cases is, and we like to call it DeFi. It sounds cool and bigger and broader, and it is big and broad. But the reality is there's these centralized entities that take our money and store it for us and give us a return on it. And what they also do is they give loans to people for really high amounts. And by being that middleman in the equation, they're able to extract huge value. And what we've done in this case is we've removed the banks, and we use a technology system that creates wins for those that are supporting, and it creates punishment vehicles for those that steal, and it creates upside for those that collateralize the system with their storing their money there. And we've basically just disintermediated the savings account in a huge way.
Yeah,
And so
which is
there's a great
crazy,
example.
right?
Yeah, yeah, that's huge.
And what's going to happen, and it is going to happen, when you won't have to download MetaMask or something pretty painful like that, and suddenly you're able to start saving, right? Because right now it's still a bit complicated. There's some friction there. The user experience isn't ideal, right?
Yeah,
We've seen that over and over again, right? It's like the tech is already here. The user experience is pretty bad at this point. We had that also with the internet. You remember when we had these modems and it was really slow, and people were like, "What are you talking about? Someday people will stream video over there like you're crazy." And I feel like the same thing is going to happen here. Right now, it's still clunky, but guess what? Like, I already see that, talking to startups every day. Like, it gets better and better. And in a few years' time, like you're saying, you won't have that intermediary, but also the user experience is going to be much better. Users are going to migrate to that just because it's better.
yeah. Oh, yeah. So there's a company actually in Israel called Portis, and there's a whole category of these API-based wallets that make it incredibly easy to authenticate in, and just as if you're using Web 2, and plug in and use your money in all these different systems. And really, what you're getting fiat on ramp, and some of them you can even use a credit card or connect a bank account and get your asset into crypto, and then you just can use the systems. And Scale connects to those Web3 API based wallets, and the end user doesn't even need to know they're connecting to a layer 2 system to get lower gas fees and greater efficiencies and uh, and speed, etc. So yeah, there's huge growth happening, and all these things are happening behind the scenes, and a lot of people aren't aware. And to our friends who say, "Oh, but no one uses blockchain," well, everyone will use it as soon as they don't need to realize they're using it. That's really where the UX win happens, when you just feel like you're using the internet, and we're getting there.
Absolutely. So, Jack, what is Scale?
Yeah, so Scale is a network that is built to support Ethereum dApps. Now, what it is it's it's a high throughput elastic blockchain network, and you could think of it almost as there's two premises when people think about blockchains in the proof of stake world, and one of them is just having a big shared public chain that everyone uses, and it's almost like a shared database for the entire group. And if you think about it, let's say Facebook and Gmail had to use the same backend database. And all of a sudden, something's going viral and it costs me more money to send my email. Well, that's not the way the world works in Web 2, but that's the way it's worked with these big shared public blockchains. The other view is having application specific blockchains. That's what Scale is. Scale is a method to give every single application its own blockchain. And it's really your own fast version of Ethereum that can connect back to the big public version of Ethereum. So all of the user activity and all the smart contracts and all the execution of action happens in your own back end, and that's in your Scale blockchain. And then whenever the users have to settle or leave the network, it goes and it speaks to Ethereum and it settles things. So, and what it does is it doesn't create this dependency or vulnerability across applications. And so Scale uses microservices. So you think about Docker and it's almost as if Kubernetes is a method to orchestrate and leverage Docker containers. And Scale, in a way, is a decentralized network that almost acts as a Kubernetes that it lives across Ethereum and the Scale network. And what it does is, let's say I have a gaming dApp. I can come to the network and these resources get deployed to me. And these resources are very flexible. So 1,000 nodes, for example, could run 8,000 independent blockchains or far fewer, depending on how big each blockchain is. It's an elastic network. So it is a network of blockchains that gives every single application their own backend that connects seamlessly to Ethereum.
Got it. So is it fair to think about Scale as a layer 2 sidechain for Ethereum?
Yeah, I like to call it layer 2 plus. So a lot of people talk about layer 2 being a pure method to only rely on consensus of the mainnet. What Scale does, Scale relies on consensus of the Scale validators, and sidechains are typically very insecure because you have less validators. There's less nodes that are running consensus, and for those, you think about it, just each node is a computer, and each one needs to have the same record and the same state. And if one's off, then we know that that one's not accurate, right? And if 2/3 of these are malicious or try to steal from a blockchain in a Byzantine fault tolerant system like Scale, they could steal the money. And so traditional side chains are not very secure because let's say you only have 16 validators. Well, getting 2/3 of 16 to be bad is a lot easier than getting 2/3 of 10,000 to be bad. Scale gets around that by a method of being able to to have a big pool of validators, be able to, in a secure way, cryptographically secure way, pull a subset of those validator or nodes into a chain and then rotate them. And there's also incentives. So I call this randomness, rotation, and incentives. And then the incentive piece is that each node has to stake a certain amount of money into the network. And on Scale, it might be like $150,000 to $200,000 equivalent. And then if you're bad in steal, then you get penalized by losing that money. And so what you do is you create a model where each individual chain gets to borrow pooled security from the entire group, because the way that the incentives work, the way that random selection of nodes work, and the way that rotation works, you create a model where you have this, and we call them elastic blockchains that can be sized up or down according to needs, but also they're elastic in the way that node assignments work. So they're very secure side chains that can be used as a side chain. It could be used even as an independent blockchain at the end of the day and not even connect to Ethereum. But the main use case is an elastic side chain.
Got it. And again, just to clarify for listeners who might not be familiar with this term, what do you define exactly as an elastic sidechain?
Yeah, so an elastic side chain, one, it's a blockchain that can work, that is application specific, that can work next to a shared public blockchain like Ethereum. And so that's the side chain piece. So you think about it, I have a DeFi dApp. On one, I'm built onto Ethereum mainnet, and then on the side, I have a Scale chain. And then the elastic component is I might just be a startup and not have many users, so I can pay very little money. I can pay $100 a month or $50 a month equivalent. You'd be paying in Scale tokens, not dollars, but just to throw out a dollar value. And what I can get then is I can get just a small amount of Scale. I can get a small amount of the network of compute. Or I might then all of a sudden we might get successful, and then I want to get 5x more. Then I can grow and I can dynamically have move to a different chain where I have more resources. And so what happens is it's elastic in the sense that that I'm able to size up or down my quantities, and it's also elastic in the sense that the nodes that work for me are constantly being shifted and rotated so that my chain can borrow security from the larger group. So that's an elastic blockchain. It's the allocation and the sizing component that make it elastic.
Yeah. Thanks for the clarification. I guess another question for folks who might be less familiar with sidechains, why do you need them? Can't you build just directly on top of the Ethereum mainnet?
Yeah, you can, but then you're sharing the throughput with the entire group. Right now,
Right. So it's that scalability issue. That's the key reason why you would build on top of a sidechain.
so there's three primary reasons. One would be block times. So on the mainnet, your block time is going to be 15, 20 seconds, 45 seconds. It depends till you can get to full finality. Now, on your own side chain or your Elastic side chain, you get sub-second block times. And so if you have users that are using applications and you want the user experience to not be bad, if you run on Scale, you can have a block time be less than a second, okay? And it only has to settle back to the mainnet when the money comes in or out, or however it's designed. The second piece is their fees. So once the user's on the side chain, you as a developer and your company or your entity, your group, is buying that chain for a period of time, and then you're not paying per transaction. So you don't penalize your users for the more they use your product. There, you can get rid of the gas fees in terms of as far as the user experience. So if you have people using the chain all the time, well, there's no cost then to them. You're just basically buying the resource like we would buy Amazon, and you don't need to charge your users every time they do a call into your database. You just charge them, monthly fee or something, or some other usage fee. So that's reason two is you can get rid of fees other than when money comes in and out. And then reason three would be throughput, which isn't the big issue now for dApps because no one's needs more than 20 transactions per second, but it will come soon. And on your side chain on Scale, if you have a large chain, you could do 2,000 transactions per second. On a small chain, you're going to be able to do 20 per second on your own chain, which is a lot. I think it's 1.7 million throughout the course of a day for a small chain. So those are the three reasons. The fourth I would say is just usability. Like, I don't care if the world's biggest gaming dApp has 100x growth. It doesn't make my service cost more. It doesn't slow the network down for me. And so that's what happens with shared blockchains. CryptoKitties was successful, and guess what? You may have had a B2B decentralized application, and your users all of a sudden have to pay 50% more and have 50% slower call times because of some gaming dApp that has nothing to do with you.
Right. That's a really important point because it's not necessarily just if your dApp is successful and you get to that scale. Actually, if another dApp is successful, right, like CryptoKitties example, they basically congest the entire network, and then you have to pay much higher fee, or your users have to pay much higher fees if they're using your product.
Yeah, exactly. Yeah, yep, exactly right.
And are you guys focused just on Ethereum?
Yeah, we're 100% focused on supporting Ethereum developers. We feel that's where the biggest growth is happening, and it is amongst the developer community. We also feel that just like in the 80s, how Microsoft won the developer platform war, they focused on making developers champions, and they were 100% focused on, and they really invented business to developer marketing, B2D marketing, and so Scale. I think we in the community in the Scale network. And by the way, I am CEO of Scale Labs Inc., but a prominent supporter of the open network, the Scale network, which is an open decentralized network. And we feel that we need to support developers, and where the action is happening is on Ethereum.
Yeah, absolutely. I mean, it's the clear leader at this point. Do you see a world where you might support other smart contract platforms, like Cosmos, like Polkadot? Recently had on the podcast the CEO of Hedera Hashgraph. Just curious how you're thinking about that.
Probably not. Where you could think of Scale supporting is each Scale chain. You could think of it as this really fast C++ Ethereum that's got souped up networking and consensus. And what you get in that is you get complete interoperability with the Ethereum ecosystem. And so let's say I'm a developer that wants to use Libra in the Ethereum ecosystem. And I say, well, there's all these people that use Libra token as a currency, but I want my game or my decentralized my DeFi product or my event sign up disruptor to be able to use Libra. Well, that's where Scale can help. Scale can basically help. Eventually, we'll support Libra and Bitcoin and other digital assets, so you can freeze them and clone them into your Scale chain and use the Ethereum developer ecosystem to support other tokens for your end users. So the Scale network still focused entirely on smart contract execution for Ethereum, but it will be able to support multiple currencies as part of that execution, as opposed to multiple smart contract and developer ecosystem platforms.
Got it. So basically other currencies on top of Ethereum, ERC20.
Yeah, exactly.
Yeah, it makes sense. And again, it's something that comes up often in, discussions. It's one thing to have a better tech for, your layer one blockchain network. But I feel like the thing with Ethereum is it's so far ahead in terms of the ecosystem, right? You have so many different developers building on top of Ethereum that even if you develop a better network, purely from a technical perspective, let's say with better bandwidth or higher throughput, the question is not really that. It's can you win over these developers and migrate them over to your network? Otherwise, it's just going to be very difficult, I think, to win. And at this point, like beating Ethereum, I think it can be done, but it's a very tall mountain to climb.
Exactly. It's just, so I feel bad for people that need to get developers to switch their entire stack, because the good thing about Scale is if you build on Scale and Ethereum, I mean, you've got Ganache and Truffle and Remix and Portis and Bitsky and Taurus and Fortmatic and this entire stack of products that help you across. You've got the entire Open Zeppelin smart contract work that's been done. You've got beginning to end. There's people creating kind of foolproof, easy to use smart contract coding, where normal developers can just basically plug and play Solidity without knowing Solidity. And there's more people working on that than I think the entire other ecosystems combined, just one component of the Ethereum stack. So
right.
So that's why we're excited about supporting Ethereum, is that community.
Yeah. I recently had on the podcast Jason Goldberg, the CEO of Pepo and OST. He used to run fab.com and competed with Amazon. That proved to be really challenging. And, he kind of compared it in a way to competing with Amazon. Not that Ethereum is at that scale yet, but I thought he just put it really nicely. It was like, there's 80 to 90% of the folks that we know that are building on top of Ethereum. And then the second group, right, that want to be the next Ethereum. And he said, like, I wish them luck. It's like, I feel like that's actually really accurate, right? Can it be done? Yes. Is it likely? Probably not.
Mm-hmm. Yeah, it's a tall order, but we'll see. I think Ethereum clearly has a head start. You get people like Pepo, or groups like Pepo, Scale, and many, many others. You look at the Graph building, what they're building for graph queries on Ethereum. Across the whole stack, there's so many amazing groups of people that are all really make up the Ethereum community. And so if you think about the Ethereum community, it's almost like it's made up of it's not like a central company. I think there's maybe 150-ish people I've heard that are employed in some way, shape, or form by EF through different corporate structures, but there are probably, I don't know, I'd say 10,000 or 20,000 people working entirely on Ethereum in some component of the ecosystem, which is pretty amazing.
Yeah, and when you think about like open source code and composability, that just becomes really powerful because you can build on top of whatever others are building.
Mm-hmm.
And it just becomes really compelling. Are you following closely ETH 2.0? and the developments there? Because obviously, I imagine that could have a huge impact on Scale.
Yeah, we are. So we're excited about it. I'm excited for it to launch. You could think of Scale, and we talked earlier about those value propositions. So all of those still hold true. The only one being the throughput issue, which I'd say is not as big of an issue yet. Maybe less of an issue if we have less of a throughput bottleneck across the shards on ETH2. But you still want your own back end so that you're not, you know, at the mercy of some other product success or failure for your pricing and your throughput. You still want fast block times and you still want gasless transactions. So you application specific backends are really, I think, basic building blocks where containerization, and this is where we're just applying Docker and we're not using Kubernetes in this world from a network architecture perspective. I mean, a lot of it's used to run nodes, but these are just kind of the way backend systems and infrastructure works. And Scale is just providing another building block that can be used in many, many different ways by developers to bring their applications to market. And it's a great fit for the ETH2 environment and stack.
Yeah, that sounds really exciting. So, what are the primary use cases that have emerged so far for folks who are using Scale?
Yeah, so there's 35 dApps in the Scale Innovator Program, and so the network will be launching in Q2, and then and what we've done is instead of just waiting for anyone to use it until we launch or until the network launches, Scale has created this a program where people can get early access to chains, use and test, and the use cases are across the board, but the way they use the network is similar across every single builder. And this, is a similar way to the way Amazon launched. They were very broad, but they went after similar sized companies that had similar technical use cases for how they used EC2. And so that's what we're doing. You look at the way people use Scale, well, they all benefit primarily from fast block time execution. They benefit from a UX perspective and usability perspective by having no gas fees in the interaction model for the end users. And those are the two main things. And they need to execute smart contracts quickly. So if I have a high volume of smart contracts, and so you see this in gaming, you see it in DeFi, you see it in B2B disruptors, you see it in ad tech, you see it in all sorts of consumer internet Web3 products where there's a middleman, and that's the cool thing about, I guess, the position I'm in. I get to see across the board. And earlier we talked about disrupting the loan market and the savings account market for banks. Well, it's unbelievable how many entrepreneurs out there have seen a chink in the armor of the big middleman and said, hey, we can bootstrap a network effect in a community environment here and go take out this player. And whether they'll be the right ones or not, I'm not sure, but they've definitely found many very clear business cases where smart contracts can come in and disrupt. And that's really where Scale helps. And if you have one transaction a week per user at like 100,000 a transaction, well, just use the mainnet. But if you have 100,000 transactions at $1 a week, use Scale, right? And so that's really the model. Maybe it's not $1, it's $1 and $10 and $100, but high throughput, typically lower monetary cost per transaction, and the requirement to execute smart contracts quickly.
Yeah, so it's just like the use cases kind of extend beyond, pure financial payments.
Yeah, and that's Scale. That's where Scale is very valuable. It's when I have Web3 type execution I need to do of smart contracts, as opposed to just pure transaction volume. And I think we'll see eventually state channels be very effective in, pure transaction. Even though there's a definite chicken and egg effect in terms of how and the way they're implemented. But if you look at Scale, people that need to execute smart contracts, it's a very, very good fit.
That's really interesting. So, Jack, how do you monetize? What's the business model for Scale?
Yeah, so Scale is a decentralized network that has a really a pure market monetization structure. And I say pure market because there's not a rent-seeking middleman or monopolistic group in the center of the market. And so one side, you have people, individuals, groups, companies, whomever, who can run servers. And it's almost like Amazon EC2, but there's no Amazon. Guess what? Anyone listening at home, you can plug a server into the wall, run the code, make sure you have the right uptime and internet bandwidth and latency. And guess what? You're running and you're working in the network and you're earning money because on the other side of the network, developers that run dApps pay to use the service. So what's happening is it's a pure market where no fees are being routed to another group, which makes incentives kind of sometimes misaligned with the participants of the network when you are routing fees. And so the way Scale monetizes is it creates a win for people, for validators, for delegators who stake tokens in the network. They essentially provide security and they provide the service to run the network, and then the other folks pay for it who use it to run dApps. Now you look at people who participated early in SAFs and core team. Well, their upside is limited in the sense that it's not like every year the builders take 30%. There's a small component of tokens that were set aside pre-launch for the foundation and early people who supported development by purchasing SAFs. So they obviously benefit when the network grows in security and utility and value. So that's the model. It's I think a beautiful business model. It doesn't set you up to become an all-out monopoly making insane margins, but what it does is it creates a phenomenal community and helps bootstrap growth and create a real win across the board for all the participants in the network.
So just to be clear, the more demand there is, right, the more utility is generated from the protocol. You're saying basically everybody wins, and you guys, I guess as Scale Labs, like you get a portion out of that?
Yeah, so at the start, so at the onset, the team has a certain quantity of tokens, and those vest over a 3-year period that starts at the network launch. So really, it ends up being over a 5-year vest, considering how long the founding team's been working on this. And then we win when the network grows in demand and utility and security, because the token, when we were starting to work on it, obviously no one could pay for a Scale chain. The token, the software didn't have value. When the software has value, when people are using it to orchestrate the network and secure the network and get access to the network, then the token accrues in value as well. So that's the model. And the way we're launching with a proof of use model really helps ensure that the utility and security are put first above any sort of token appreciation, where people just launch a token on exchanges. And really, it's almost more of a financial instrument compared to a proof of use model where you're really launching the token as a software. And it's even not even right. I think token's even a bad word. It should be called, it's software that's functional, but also acts as a payment mechanism.
Yeah. I mean, the thing is, like with the whole token economics models that are out there right now, I feel it's just so early at this point. The ones that can prove, that their model works, I'm sure many will follow later. At this point, like I see a lot of projects that, are building great tech, but it's still TBD whether that is going to be fully captured by the tokens that they're issuing. Is that something that you spend a lot of time thinking about? How did you approach that initially when you thought about structuring the financing for your company?
Yeah, so there are a few things come into play here. One um, is how does volatility of the token impact uh, work in the network? And so if you think about it, if I'm driving, let's say we have a decentralized Uber and I'm a human, I'm driving around, I'm getting paid in a token. One day I get paid, enough to, help me buy coffee because the token's depressed. The next day I buy a cup of coffee, and then 2 weeks later, that cup of coffee is worth as much as 3 months of work. that's really difficult to get humans to put their own time and effort into a non-stable currency model. Fees are a great way. If you look at the brain trust business model, the way they use tokens are a good way when you're incorporating a token into a human work environment. But when you look at the people plugging machine into a wall and having a machine do work, i.e., a computer, we see this with Bitcoin all the time. People are very comfortable with volatility when the real work is just plugging a machine into a wall. Now, and so I think the less human oriented on the work side or the supply side of a market, the task is, and the more compute oriented it is, the better early initial fit there will be with tokens, because it's just going to take instability is really harder on human effort and human time, and people aren't comfortable with that. Now, on the demand side, Scale uses a supply load curve similar to ETH2O model, where if the network's underloaded, the service costs less. If it's overloaded, it costs more. It incentivizes more supply. It ends up pushing the price down. And so that mechanism helps impact volatility on the demand side. It helps impact it in a way that it essentially mitigates the volatility component. And people buy a chain for 6 months or 12 months or 24 months, and they just lock the asset in. So there's not volatility other than the 1 second when they're buying, and the load curve helps really suppress any sort of major issues that come with token volatility. So I do think that token models are very well suited for certain types of business structures, and scales and protocols in particular are very well suited for this type of economic structure.
When you talk about that, do you have the proof of stake consensus algorithm model in mind? Or is that something you would consider to be more human intensive because you have to stake your tokens?
No, I think so. That's easy as well, right? You just stake your token. You're not necessarily, so Scale is proof of stake consensus. If I'm a delegator, I go lock my tokens into the network for 3, 6, or 12 months on Scale, and I'm securing the network. I'm collateralizing the network. And similar, if I'm using Compound and I'm collateralizing the network with my money that people can take loans off of, I'm a human. But I'm not necessarily having to, sit there and do manual labor, wait on tables, drive a vehicle, work in a factory, write emails, do calls. If I'm putting time in as a person, physical time, then I'm way less comfortable with volatility. Again, if I put money into a system and I leave, or I plug a server into the wall or light up a server on a cloud service like Amazon or DigitalOcean, then hey, I'm looking at this from a long-term play, and I'm not necessarily so concerned if one day, my energy costs or my server costs in a colocation center, were up or down. I'm kind of looking at a long-term horizon. Does that make sense?
Yeah. And what's your vision for Scale? You talked earlier about your plans to launch in Q2. Where do you go from here? Like, what's next on your roadmap?
Yeah, so our big vision, one, we believe that we're going to see many, many incredibly successful business models and dApps running in the world. I think centralized businesses will have components where they're running decentralized structures or blockchains or token-oriented components of their business. Decentralized businesses will become very successful. We're going to see it across the board, and we're going to see a lot of hybrid models. And what that means is we're going to need a lot of smart contracts. And so Scale, the grand vision of Scale is that 99% of the world's smart contracts run on Scale through the Ethereum ecosystem, and also storage. And so Scale really is teeing itself up, and the Scale community is teeing itself up to be, what Amazon AWS is to a centralized world, to Web 2. Scale can be a decentralized cloud in combination with Ethereum to be the AWS of Web3. That's the big grand vision. Now, we obviously have to start small. We're very focused on the early developers in the Ethereum world and making all the Ethereum developers successful. That launch will be in Q2 through the Consensus Activate program, and we're going to see there's 35 dApps already on board, but the goal is to have 100 really phenomenal use cases up and running before long, and 20 of those, hopefully, we see many applications with over 1 million daily active users. So we're doing our part. Other people are across the stack as well, and other groups, and we're excited to see this stuff become a reality. We've all been waiting for a long time, right?
Yeah, definitely. It's mind blowing, like how many different use cases can be applicable, even though, again, like I think it's really early at this point, and we still see the numbers are pretty low across the board in terms of usage.
Yeah. And these things are just tough to use right now. I mean, I personally try to use them as much as I can, and sometimes I'm like, you know what? I don't want to get my Ledger wallet. I don't want to. It's just going to get easier, and we're going to see a lot of growth. And man, it's the other thing, like the horizon for these things. I mean, the typical SaaS company that's funded with Series A has a 7-year horizon before a liquidity event, and that's average. So that means there's some that are a lot longer, some are shorter, and so just Ethereum's not even 7 years old. So we're
Yeah.
then you think about all the businesses that I don't think the right infrastructure is going to be there until this year, till we actually can create a user experience that even people in the space will use every day. Not even talking about our parents or grandparents, cousins who don't know anything about crypto.
Right. I mean, right now, to your point, like downloading MetaMask and stuff like that, and then using, I mean, it's just like such a pain. There's so much friction right now in using DeFi and so forth.
Yeah.
Once that improves, I think it can have dramatic impact on usage.
Yeah, and it's this delicate dance where user experience and security usually are diametrically opposed. And the more secure something is, the harder it is to use typically. And even look at a bank. Like if I go keep my money behind a 10,000-pound safe door, well, it's very secure, but if I want access to it, it's very difficult. My money may be less secure in my wallet, but I can give you cash at any coffee shop or tap my cell phone, and I give up security, but I get utility, and we've got to do the same thing in crypto.
Yeah, absolutely right. Again, like that's why I think like in crypto, it also takes a bit more time for the whole ecosystem to mature. We're talking about money, right? We're talking about financial services. This isn't just another app where, you can order
Yeah.
something. It makes it much more complicated. So kind of want to shift gears a bit, Jack. We talked earlier before the recording about the coronavirus. It's causing so much chaos pretty much everywhere at this point. What's the status in San Francisco? How does that impact your day-to-day work environment?
Yeah, it's almost surreal to think about. It's like the first act of a zombie film, and we're in the first act, and like we're about ready to go into the second act where we like hit this trough, and just who knows how deep this trough's going to be as the story arc changes.
Right.
And I think everyone's really waiting and wondering, like, is this going to blow over in a week or 2 weeks? And I think most people have accepted that the economic impact and the impact on schools and work life is going to be impacted definitely for the next quarter. And there'll obviously be issues on the broader economy for the rest of the year. But who knows how bad this is going to be? So what we're doing, it's impacted us, and San Francisco is really concerned right now, and we've shut our office, or we've just made it so, hey, if you don't want to go to the office, please work from home, especially if you have people in age demographics that in your family that you're around, that you live with, that could be severely impacted. So most people, 90% of people aren't going to the office, and the same thing with our Ukraine office today.
Wow, 90%.
Yeah, and that's in some really big companies whom, for some reason, they're keeping it confidential, and the employees are telling everybody, so maintain confidentiality. But some of the largest employers in San Francisco are shutting their offices down right now, shutting access down. So we're seeing people being forced to work remotely, and I'd be happy to tell you what the Scale core team is doing, the Scale Labs Inc. core team, to kind of not let this impact us. But it's
So how do you handle that as the CEO of the company? How do you, because that must change the work dynamics quite a bit when suddenly pretty much like the entire office is not really physically in the
yeah.
office.
We actually just had an all hands meeting right before this. So I'd be happy to just transparently share what we talked about. So one, the Scale network is a decentralized open network like Ethereum. But just like Ethereum, there's the foundation, about 150 people on core team that work full time supporting it. Scale Labs Inc. is just one entity, right? That is a supporter, but we're the core team building, and it's but this core team supporting this open network, we have to act like a company, and so what we're saying is, hey, let's.
How big is that team, Jack?
There are 30 people.
Got it. Okay.
Yeah, and split across Ukraine, Kharkiv, Ukraine, and San Francisco. And so what I told the team was, hey, number one, let's stay healthy. Let's focus on health of ourselves and our families first before business. But then two, let's be productive. When we're working from home, be productive. What separates great teams from average teams are teams that can get through friction and turmoil and be focused and flexible. And so I think the companies and the teams, and especially those building technology, the successful ones over the next 6 months are ones that stay focused. They don't let these things disrupt their plans and their building. And if you're at home, you're at Starbucks or wherever, if you're not in the office, you can still get your job done. You have internet, you've got a computer, and you've just got to keep pushing through. And so, in light of first, hey, let's take care of our health, but second, let's not. It's not halftime. The game's still going. Let's go play ball.
Yeah, it has an impact on people's mindset, right? Like once people are concerned about their health or their family's health, it's really challenging to keep them focused on the task at hand.
It is, and especially, right, like we just talked about this, Stanford just shut school down, and countries, Ukraine now has just banned all social gatherings. The state of Washington banned any gathering of more than 250 people. So this is real stuff, and so it's hard to read about these life-changing things and then go back to doing kind of a mundane task in front of your computer. But you just again, I think the really successful teams over the next 6 months or a year are going to be, one, teams that have good funding that can make it through any funding trough, and two, teams that are focused. And I think we're fortunate at the Scale core team to fit those within those categories of not needing additional funding over the next few years to operate, and I think having a set of individuals and a team that can focus, but it's not easy.
Yeah, absolutely. I think that's a very valid concern, right? Teams that did plan to fundraise soon and that are running out of cash, I still think you can do that, but it's probably more difficult at this environment to fundraise.
Yeah, especially for the next month. I think there's just a shell shocking that happened.
Yeah.
My first company the first company I founded, it was June of 2008 and we got the thing going and got really close to raising around a capital. And then the market just completely tanked, and the Sequoia email went out and everyone was just like, whoa. And let me tell you, it was impossible to raise funds for about 6 months. We lived off of ramen noodles and, and survived and built a world-class major company, and eventually raised over $100 million in capital. But there were 6 months of survival, and that's what it took. And I think the good companies really can grow through downturns because they have a strong value prop and they're committed. And I think we're going to see that happen again.
It is different, but in a way, it kind of reminds me of, the market shock that happened in the crypto space end of 2017, kind of early 2018, right? When the ICO market crashed.
Mm-hmm.
And suddenly it became much more difficult to raise funds, certainly from, not professional investors, more from retail investors and so forth. And you could really quickly see the teams who were heads down, executing, building stuff, take Binance, for example, as opposed to other teams that just really didn't do much and kind of fast forward 2 years from that period are now running out of cash and are considering closing or maybe even already shut down their business. It's really the great teams that are just executing ruthlessly, regardless of the market conditions, that set themselves apart from the rest.
Yeah. Yeah, that is so true. And we raised our capital, and the majority of it, or the first major round, was in July of 2018. And I'll tell you, it was hard. There was a much higher filter and the valuations were maybe a tenth of what they were of people who raised a year or earlier, or 6 months earlier. But we ended up getting really lucky because of that, because it helped us really kind of sharpen the sword or the axe in terms of what the business value prop was. And it also helped us raise at a very reasonable valuation that's lasted through the downturn. And we said, hey, let's create a win for people, as opposed to raising it like $1 billion valuation and then, or higher, that it just, you only have one place to go with a pre-launch product, and that's down. So, I think it was hard at the time, but in the long run, we were lucky. And maybe the same thing is going to hold true for people that are pushing through and getting to that first phase right now as well.
That's the other thing, right? When I talk with entrepreneurs, like there's a delicate balance there, right? When you think about valuations, yes, as an entrepreneur, you probably want to get high valuation and kind of minimize your dilution. But on the other hand, like if the valuation is too high or you raise too much money, it just puts so much pressure on the entrepreneurs to deliver, sometimes unrealistic pressure, right? Because by the time you fundraise again, you got to justify a much higher valuation. And sometimes it just puts you in a difficult spot. So it's about finding that balance. Certainly, again, end of 2017, early 2018, valuations were just out of whack in the crypto space at that point.
Yeah. Yeah, they were. And the same thing happened with consumer internet too, back in, I think, like 2015, 2016. And I had a few friends, many friends, that were fortunate to raise huge valuations, like 700 million valuation, and they at Series B, and it was ridiculous. And what happened, sadly, is a lot of them took a poison pill, and you do that, and then your only next step after is acquisition by only maybe 2 or 3 players that could acquire you at that rate that the last round would not veto, or you have a horrible down round, and so you just, same thing happened with crypto.
Yeah, exactly. So speaking of fundraising and valuations, one thing I always ask founders coming on the show is about the fundraising process.
Yeah.
And I know you guys have raised about 17 million so far, right?
Yep.
And was wondering if there's a lot of aspiring entrepreneurs listening to the podcast. And I was wondering, Jack, if you can share some best practices or tips about the fundraising process that you found helpful when you were at that stage.
Yeah. So I've got a few pieces of advice. So one would be, in the crypto space, if you hold yourself to an equal or higher standard to an entrepreneur building in SaaS or consumer internet or other proven mature categories, and that means hold yourself to the same standard, and the amount of research you do, the amount of effort you're putting into your building your deck, into understanding your TAM, understanding the customer needs and requirements, and understanding competitive landscape, and all of these things that really, when it comes down to, are really understanding and being able to explain your product market fit and financial perspective to an investor. You will be in the top 1% in the crypto space. There's a lot of incredibly smart people in crypto that are fundraising, that are incredibly smart, but not necessarily that mature when it comes to structuring how you go about the business side. And they may be world class in a certain category of technology, but not necessarily applying best practices when it comes to fundraising. So one, I would say, hold yourself to the same bar, do the research, do the analysis, read about how to put a deck together. And the main thing is, like, get out there and talk to customers. Your job as an entrepreneur is to not convince someone to invest, but to help do the research for them so they know the risk profile. So you can say, hey, here's what we're doing. Here's how we're doing it. Here's where we're strong. Here's where we're weak. Here's where the risks are. But here's where the dramatic upside is if we're successful, if we can get over these challenges. So if you go to an investor and they say, well, what about this? And what about this? And you're not able to say, well, here's how we thought through this. And also, if you haven't even positioned that before they're digging into these key points, you've really done a poor job of helping them make an investment decision. So that's just some quick advice. Happy to, if you dig in more if you'd like, but those are two critical things.
Yeah, these are really great points. And I think on that last one, professional investors can really quickly, like the good ones can really quickly see through that. When you sit with an entrepreneur and you start digging into the product and the go-to-market plans and so forth, it's fairly easy to tell whether they've done their research and have talked with, enough potential users. It doesn't even have to be users, right? It could be even potential users. It's pretty easy to tell how thoughtful they are about it and whether they've done their homework or not. And that is definitely something that's really important for investors to see. You want to make sure that the entrepreneurs are well aware of both the opportunity, but also the challenges that they might face in executing on their plan. And if it's not a good plan, right, you want to make sure that they figure that out as soon as possible. And the only way really to do that is by talking to as many potential users or customers as possible in a short period of time. So that's a really good point. Anything else you want to add?
Yeah, the other, you helped me think of another thing with that comment is one of the things with crypto and blockchain entrepreneurs is we are OSS, all of us, right? We're open source software community. And there's almost this feeling that that there's no mutual exclusiveness between having a good business model and having like a capitalistic attitude towards your business and being like a real pure OSS person or OSS community member. So the reality is they're not mutually exclusive. You can create great business wins for your community and the constituents that are involved with the, your open source software initiative, and, create a great open source software developer community. And so you see this happen. There's many incredible examples in the enterprise OSS world. And I'd say study those. I mean, look at what HashiCorp and other groups have been able to do. And you're just going to see there's just a lot of areas where you don't necessarily need to be like a nihilist and against making money, because when you go talk to an investor, you're going to have trouble getting funded. Now, some people like to play up the street cred component of we don't have a business model, we're just building, and that's great. But you can be both. Okay.
Or you should be both, right?
You should,
exactly.
But you wouldn't believe how many people aren't, and they are proud of the fact that
I would. I see it every day.
Yeah. Well, those are the good ones are the people that are proud of the fact they have no business model. The sad situations are many people just don't know they don't have a business model.
Right.
But you can that's a solvable problem. It just takes doing the right homework, doing the right research, and it's something that can be avoided, and you can clearly differentiate yourself from the competition, and not lose open source cred.
Right. Now, that's a really good point. I mean, the way I tend to think about it is, all of us in the space, right, in the crypto space, we're really excited about decentralization and the benefits of blockchain technology. Having said that, that doesn't mean that you have to, reinvent the wheel from a business perspective. And I think there's actually a lot that entrepreneurs can learn from the great internet businesses that have been built over the past 20, 30 years, right? Like there's a lot to learn from the Googles, the Microsoft, the Facebooks, the many great businesses that have been built during that time. And many of actually the business strategies and the go-to-market approaches that these companies applied can actually also be applied to crypto with the tweaks necessary for an open source decentralized product. But I actually get, from an investor's perspective, I get concerned when I see a team that's trying to reinvent the wheel across the board, whether it's their go-to-market, their business strategy, their product, and so forth. Building a startup is difficult to begin with.
Yeah. It's all tough. So don't handicap yourself when you don't need to.
Yeah, exactly. So last question before we wrap up, Jack. Spent a lot of time talking about Ethereum and smart contracts. Curious, what's your take on Bitcoin?
Oh, I'm a huge fan of Bitcoin, and I've never sold any Bitcoin I've been in the game for a long time. I'm just a long term community participant and believer, and I see Bitcoin as and Ethereum. It's almost like people they try to compare Bitcoin to all these other assets, and I'm like, I think it's a short sighted perspective. Like, are we going to compare the value of Facebook compared to Oracle, database or something, or Salesforce.com compared to VMware? Like, come on, like there's space for different value props across an ecosystem, and one success doesn't subtract from the other. They actually support each other, directly or indirectly. And I think Bitcoin and Ethereum and all of the dApps and different protocols actually are a part of a broader ecosystem that's still a very small one. And because it's small, people like to compare them against each other as if success of one takes away from the other. And I think it's short-sighted. So I think Bitcoin is going to be a phenomenal piece of our lives. And there's not many good things about the coronavirus. One thing is that maybe it's one of the last opportunities to buy Bitcoin again at under 10,000 USD peg. So so that's my thoughts.
Yeah, totally agree about Bitcoin and Ethereum not necessarily competing with each other. I mean, the use cases are actually quite different. Yeah, I never get like either the Bitcoin maximalists or the Ethereum maximalists. There's room for both of them. There are different use cases. Probably there's room for a few more actually.
Mm-hmm.
So yeah, I completely agree with that. By the way, on Corona and Bitcoin, one thing I hear critics of Bitcoin saying now is, you told us this is a hedge against the economy, right? And if there's a big crisis happening, then Bitcoin is like, that safe haven that we should all have. And actually, Bitcoin, to your point, has dropped as well in terms of at least the price so far during that coronavirus. I mean, is that something that shakes your belief a bit in Bitcoin as, a store of value, or like, how are you thinking about that?
I think it would really, so store of value obviously is the clear winning use case. I mean, it's a very slow consensus model. It's very secure. Store of value is a very, let's call a spade a spade. This is the world's best store of value, and it's still a fraction of other stores of values like gold. So, I think I've never really bought the pure hedge model. Now, if there was an issue where we had bank volatility, then yeah, and that caused economic issues, well, then Bitcoin's going to go up in value, and it's a hedge against fiat and traditional currencies. But let's be honest, the people that are holding and trading and may need short-term money, or may need to have a buy low, sell high strategy, it's going to follow other broader macroeconomic trends. And I think it's a bit of a fallacy, but hey, one of Bitcoin's strengths is that it has a world of people that promote for it. And unfortunately, the product marketing hasn't gone through like a super stringent filter. So I think that's maybe one, partial fallacy, but it's just a partial fallacy.
Yeah, and it's also like still early days, right? It's only been in existence, like 11 years?
Yeah.
Certainly much less than that on a more meaningful scale. So yeah, it's probably a bit early to judge at this point.
But hey, any impact will be short term.
Yeah, I mean, the real believers are, like they're not worried about a 20% drop, right?
Yeah, like, oh, just 20%.
Like that can happen in a day with Bitcoin, right? Either direction, right? It can also gain 20% probably. So
Exactly.
it's actually kind of funny to see all these analysts, right? You see equity analysts on Wall Street, and they're like, they don't know how to handle like that 5% drop that happened recently. And then you see like the Bitcoin traders, and they're like, it's Monday.
Yeah.
So, cool. Jack, thanks so much for coming on the show. Fascinating discussion, and really appreciate you being so candid and sharing such great insights. It's been a pleasure.
Yeah, hey, the pleasure has been all mine. Really, really enjoyed it, and I look forward to staying in touch. And yeah, thank you so much for having me.
Thanks for listening. If you like this episode of the Blockchain VC and want to help bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to the podcast. This only takes a few seconds and helps get the word out.